So how is it going, guys? Do you all have power at home? Now it's getting recorded. Right. So let's start, guys. Okay. So, what is SLFRS 15, guys? This is also one of the accounting standards. Okay. So you all know what standards are, right? You guys know what standards are. Can you all tell me what standards are? You all have already learned some standards with me. Guys, are you all sleepy? I know you get a fasting. Okay. I just need to check if I'm audible, guys. Am I audible to all of you? I'm not loud enough. Why is that? Muba, can you check and tell me now? Am I loud enough? Guys, would be really helpful if you all can unmute, please. Right? We'll save a lot of time, please. Okay. So you guys know what standards are. Standards are like these rules for each and every aspect of accounting, be it non-current assets, be it intangible non-current assets, be it inventory, right? We have separate standards which will dictate or say as to how you need to treat, mainly covering initial recognition, how do you initially treat it, and subsequent treatment as well. So far, what are the standards which is in our scope? Local A levels 2022. You guys will be tested on these standards. We have LKAS, Lankan Accounting Standards, okay, as well as SLFRS. LKAS, guys, we have one. What is one? Who can tell me what is one? Sorry? Formats, yes. It's for the presentation of financial statements, okay? And then we have learned LKS2. What is that?
Inventory.
That's right, that's right. And then we have LKS3. Do we have LKS3? No. We have LKS7, which we will be learning. This is for cash flows. Okay. And then we have LKS8, which we will be learning. Then we have to learn 10. Okay. Then we have already learned 16. What is 16? What is 16? PPE, that's right. It's for the property, plant, and equipment. Correct. Okay. LKS 17 is for what? Who can tell me? Let's see our memory power. What is LKS 17? Yes, guys.
It's a lease.
Lease. But is this the old standard or new standard for lease?
Old.
Exactly. This is the old standard. So it's not applicable anymore. Since January 2019, what is applicable? SLFRS 16 is applicable for lease. Okay. So many people tend to confuse. PP is LKS 16. SLFRS 16 is for the lease. So 17 is outdated. Okay. And then We have 37, which we did 2 weeks back, right? Provisions and contingencies. That is also done. And then guys, there is 18, right? Now LKS 18, there was LKS 11, construction, revenue recognition. All these standards are now outdated. For revenue recognition, we have SLFRS 15. What is the difference between LKS and SLFRS? Both are standards, guys. No big deal, no big difference. But SLFRS are the latest ones. If you take LKS, they have up to 41. In SLFRS, the latest one is 16, right? 17 people are talking about insurance, maybe or may not. So let's dive into the lesson. SLFRS 15 is, guys, purely talks about revenue recognition. So using this model, whatever the type of business you are doing, you can use this model to record your revenue, whatever the type of business you are doing, except for few business types, right? There are 3 types of businesses which cannot be covered under SLFRS 15. All except 3 types. Number 1 is leasing businesses. Yeah, leasing companies. They can't use this standard in order to record their revenue. Number 2 is, guys, financial instruments. You know, banks, finance companies, they can also use this standard to record their revenue. And then you have the insurance companies. So just giving you an overview. Except for these 3 types of business, guys, all other businesses can make use of SLFRS 15 to record their revenue. Okay. So it's not very complicated. There's only 5 steps that you need to remember. 5 steps, just 5 steps. So earlier we had LKS 18, and then we had LKS 11, and couple of more standards which people use to record revenue. But then, just like LKS 17, even these standards had their own loopholes, right? So in order to prevent people from taking advantage, we got updated to a brand new standard, which is SLFRS 15, which we can use without any fear. Okay. So you also need to learn what we are going to learn today is not majorly deviating from what we have learned in the past. Okay. Now in the past, what is the simplest method of recording revenue? As per what we have learned before, based on the basics, normally how do we record revenue? For example, let's take 2 years, 2020, 2021. Let's say you are renting out. Okay, you're renting out your building. 2020's rent, you are receiving it in 2021. Tell me, which year's income statement will this rent be recorded? 2020's rent, you are receiving it in 2021. So tell me, we will be recording in the income statement of 2021 or income statement of 2020? Tell me. Yes, guys. Anisha, Akram. Amna, Hajira, Hasna. Hasna, why are you silent today? Yes, guys, tell me. Salma, where do we record? It's a very basic question. Basic question, right? Nothing complicated here. 2020's rent you're receiving in 2021. Where do you record 2020's revenue? In the income statement of 2021 or 20? Yes, I'm dropping a message in the group. Just check. Yeah, that's right, Chatisha. We have to record in 2020 based on accruals basis. right? We use accruals basis to record revenue as well as expenses. So that's what we've been doing so far. So what we are going to learn up next is not very different to what we have learned before. Simple as that. Okay, so let me ask you this as well. 2020's revenue, if you have received in 2019, still when will the revenue be captured? Which year? Which fiscal year? Which fiscal year, guys? That's right, Risla. 2020. 2020. So, guys, what we are going to learn today is also very similar to this concept. Very close to accruals concept, but a little bit of extra complication. Simple as that. Okay. Now I look super sleepy. Let me stop my video. Right. So 5 steps. Remember, what you have already learned is only broken into 5 different steps. So you all have already learned accruals basis. So whatever that is in your mind will be covered in these 5 steps with some new terms. So nothing complicated. Okay. Why do we need this type of a standard, right? You all can question me. Sir, isn't revenue something simple as, just realization? You selling something, okay, you recording revenue. Or you giving a service, you provided the service, you recording the revenue. Why do we have a separate standard? Don't you all have that kind of a question in your mind? Simply because, guys, revenue structures are complicated at times. Pricing is complicated at times. It is because of these reasons we have a separate standard to cover revenue. For example, now, how many of you guys are using Dialogues? That Blaster package 345. Blaster package. How many of you guys are using that? Tell me. Nobody? I don't know what has happened. We don't get any responses. Are you all using my chat or something? Check. Okay, guys. Wait. Let me rename myself. Do you all see the host with a name? Reply to me. Do you all see the host with a name? Reply to me. Okay, you all can reply to that. You all can reply to that. Okay. All right. Okay, so normally what do you get in that package? We get 1000 minutes D2D talk time, and then there is 1000 SMS, right? And then there is free data, right? I don't know what's wrong with Dialog. Sometimes we pay our own money and buy data, but still in the package or the messages, they'll say free data, free data, free data. I don't know what's wrong with them. Okay. So Dialog, is it only talk time they're offering? Is it their only service, talk time? Or are they offering more services? They are giving you talk time plus they are allowing you to SMS, and they are giving you data as well. So guys, Dialog is providing you 3 different services from this package. Is that clear to all of you? Can I hear some yes?
Yes, sir.
Right. Now all these are being provided for just 345 rupees. Now if you were to buy these separately, how much would these roughly cost? right? If you were not buying this package, let's say you just called from one dialogue to another dialogue, right? For 1,000 minutes, how much would it cost, guys? Just tell me roughly. Roughly, yeah? You don't have to be accurate. Roughly how much? Maybe 1,000 rupees. Yeah, 1,000 rupees. Yeah. And maybe for the SMS, around 300 rupees. And how many GB do they provide in this? Let's say 4 GB. For 4 GB, how much will it cost, guys? Dialogue for 4 GB? Hello, guys. I need more interaction, huh? For real. Let's say rupees 400. Okay. So just look at this and tell me, guys. In total, if you were to purchase all these separately, how much would that cost? $1,700. That's right, Radusha. 1,700. Okay. But Dialog is offering all these for just 345 rupees. For 345 rupees. Right now, in Dialog's income statement, how are they going to show? Are they just going to say Dialog income statement? Now they have their own revenue streams. One is talk time. Talk time. The other one is SMS. The other one is data, mobile data, right? Now, do you think Dialog can put a separate category saying blast a package and add that revenue there in their income statement? Does it make sense to do like that?
No, sir.
No, it doesn't make any sense, right? So you need to know how we can prorate this 345 between these three revenue streams. So this is one complication we will come across, right? The revenue structure. The second complication is the pricing. Okay. As you can see, sometimes there can be variable pricing. If you do a good job, this is the price. If you do a bad job, this is the price, right? So you can see these type of complicated revenue structures everywhere. If you, let's say you buy Honda, let's say you buy a bike from Honda, right? How many of you guys have been to Stafford Motors, Maradana, to buy a bike? When you buy a bike, guys, you get a bike plus, right? First two services free. So Honda company, they do provide services also. So what do you think they can do in their income statement? Can they only put under sales of goods, which is the bike, or sale of services? Services is provided for free. But does that mean they are really giving it for free? Do you think they are really giving it for free?
No, sir.
No. So guys, whatever you pay, let's say you pay about 500,000 rupees. Now bikes are close to 500,000, right? Let's say you pay 500,000 rupees. That 500,000 rupees, guys, only a portion of it will go into sale of goods. Another portion will go into sale of services. Although they tell you free, remember guys, it's never free. It's never free. Is that clear? All of you? Can we hear some yes, please? I mean, don't give yes just for the sake of giving yes. Just tell me. All good, right? Everybody? Let me check the chat.
Yes.
Okay. How about Rushda? Rushda, you good? Zaha? Zaha, or is that Zaha or Zaha? Radushan? Shahlan? Okay. Okay. So guys, basically 5 steps to keep in mind. Number 1 is contract, right? The customer and the supplier should have agreed to do something, right? The supplier should have agreed to provide some services. That is a contract. So this can be written as well, right? Step 2 is performance obligation. So these are the promises. Whatever the supplier is promising to give you. Now, if you buy the blaster package from Dialog, what are the 3 things Dialog is promising? What are the 3 things Dialog is promising?
Talk time, SMS, and free data.
Exactly. Talk time, SMS, and even Tejika is telling free data now. Okay. Right. Okay. So guys, these are the 3 different performance obligations. Now the transaction price is 345. Okay. So we need to know how to allocate this 345 between the performance obligations. And then finally, as we satisfy, the revenue will be recorded. Okay. Number 1, contract. There's nothing much here. Right? It's a bit of theory, or you can read it later. Contract should exist if it talks about the rights of each different party, right? The supplier as well as customer. Performance obligation is the most trickiest part. This is the most trickiest part. Now I remember last week somebody asked me, was it Zikra? Somebody asked me a doubt on warranty services. Is Zikra here? Muba, you didn't call her. Anyway, so let's see how we can identify performance obligation. Guys, on a nutshell, remember performance obligation is a promise made by the supplier. Okay, it's just a promise. You go to Dialog, you buy for 345, they promise you 3 different things. So these 3 different things are performance obligation. However, there are few more criteria to know whether that is a separate performance obligation or not. How do you identify whether something is a separate performance obligation or not? Simply, you just ask one question. Okay. Now, first of all, Dialog is giving talk time, data, as well as SMS. Then your next question is, does Dialog sell talk time, data, and SMS packages separately? Do they sell?
Yes, sir.
Yes. Dialog, they sell SMS separately, talk time separately, data separately. So then, although this package gives you 3 promises, you need to know these 3 promises are distinct. Okay, these 3 promises are distinct. So what is the question you should ask yourselves? What is the question you should ask yourselves? Can the business sell separately? If the answer is yes, then basically those are separate performance obligations. Now, for example, guys, do you all remember back then when there was COVID and when we were all put into lockdown, this thing was so famous. What is this? Who can remember? How many of you guys made this? 1.5 years ago. Akram, what is it? That was right. Akram, tell again. Did you do that? You tried making it? Okay. So basically, what are the 2 ingredients? What is this brown color part and what is the bottom part, guys? Guys? Okay. So tell me something that looks similar to Dalgona coffee. So basically here, this is like the chocolate cream, right? This is like the chocolate. And this is the coffee. Now you go to a restaurant, right? Restaurant. Do they sell coffee and what do you call whipping cream and chocolate separately? Do they sell like that?
No, sir.
No. So in a Dalgona coffee, this chocolate and coffee, are they separate performance obligations? In order for something to be a performance obligation, a distinct performance obligation, separate performance obligation, the business should be able to sell them separately. Now, my question is, does cafes sell chocolate and coffee and whipping cream separately?
No, sir.
No. So in that case, tell me, are these separate performance obligations? Are these separate promises?
No, sir.
No. No. Simple as that. Now, how many of you guys have been to barista? Barista? Barista also has this type of a font, right? Barista. I don't know how many R's. Maybe the spelling is wrong. Okay. Now my question is, guys, have you all been to barista where they will sell what do you call a package where you get the coffee as well as the sandwich? Have you all been there? Coffee also you get, sandwich also you get. That's a very reasonable package, right? Sometimes buying the coffee alone will cost you around 500 rupees. But you get the whole package for, let's say, just 600 rupees or 700 rupees. The bundle. Yeah. Normally, if you were to buy the coffee separately, it will cost you 500. Sandwich separately, cost you 400. So if you were to buy these separately, how much will it cost in total?
900.
900. However, what does barista do? They will do a bundled pricing. They will charge only 650 for both of these. Yeah. Now my question is coffee and sandwich a separate performance obligation?
Yes, sir.
How do you say yes?
Because they could be sold separately.
Exactly. If you go to barista, you can buy coffee separately and you can buy sandwich separately as well. Is that clear? You can buy coffee separately, you can buy sandwich separately as well. Are you guys clear? So that will lead us to the conclusion. This is a separate performance obligation. Coffee is a separate performance obligation. Sandwich is a performance obligation. Are you guys clear?
Yes, sir.
Right. Now, just like I told previously, you take Honda, right? Stafford Motors. You go there, right? They'll sell the bike and they'll tell you will get free service. First 2 service free. Now, my question is, does Stafford Motors or Honda company, do they provide service separately for people who have not bought bikes from them also?
Yes.
Yes, they do. So in that case, are these 2 separate performance obligations?
Yes, sir.
Exactly. So this is one performance obligation. This is another performance obligation. Okay. So remember, the first step is identifying the contract. Nothing much to do there. Second thing is performance obligation. Here is where the trickiest part comes into play. You need to know how to identify if something is a separate performance obligation. Basically, it's a promise made by the supplier. He's telling, I will offer you this, I will provide you this, I will sell you this. But however, you need to ask yourself, can the supplier sell these separately? If he can sell these separately, then that means although he is giving all these promises at once in one bundle, still these are distinct performance obligations. Okay, my next question. Now, Easylink Academy, do they provide you access to recordings?
Yes.
Yes. Tell me what you get by attending classes here. You get handout. Okay. Then you get lectures, live lectures. Then you get the recorded sessions as well. Now my question is, guys, are these separate performance obligations? I want everyone to respond. Are these separate performance obligations? You all can tell me what you think. Everyone. Felicia, Nada, Shahlan, Isham. That's right, Chati. That's right, Salma. No, it's not a separate performance obligation. What is the reason? Guys, at Easylink, do they sell you handouts separately? Do they sell handouts separately, recorded separately, recorded sessions separately, and lectures separately?
No, sir.
No. So that means these are all one performance obligation. It's not separate, but this is one, this is one. Do you all now understand how we can identify if something is a performance obligation or not? You need to ask yourself, can we sell this separately? If the answer is yes, then it is a separate performance obligation. Is that clear to all of you? We have 23 participants here, please.
Yes.
Sir.
Nashuha, Radurshan, Muba, Sauda, Tejiga. Is that Zaha or Zaha? Zainab Aisha. The ones who normally unmute, you all can go ahead and unmute. Huh? You don't have to feel shy because it's being recorded or anything. I mean, it's going on live, I know. That doesn't have to stop you from unmuting. Okay. So now you all know whether something is a separate performance obligation or not. Okay, let's take another example. You take singer. Guys, AC, if you buy AC, will they give you installation? If you buy an AC from them, will they install it for you and give? Most of the time, yes. Most of the time, yes. Okay. And then there is something called maintenance also. The servicing part. Now, my question is, guys, does Singer install if you have bought AC from some other company? Will
No,
they
sir.
come and install? No. Only if you bought AC from them, they will install and give. However, if you have bought some other ACs, if you go to their repairing division, can they repair and give it to you? They are technicians. Yes, they can. So that means here, AC and installation is one performance obligation. Maintenance is another performance obligation. Guys, are you all clear how to identify performance obligation now? This is the second step.
Yes, sir.
Okay, thank you. Right. So now let's go to the next step, which is determining the transaction price. Okay. Transaction price, it can be sometimes complicated, guys. You know, there can be bundle discounts, right? There can be penalties, there can be bonus, there can be what do you call outcome-based prices. Those are all called variable consideration. Now, these are too advanced. Whatever that is below variable consideration. Financing component is advance. Non-cash consideration is advance. Consideration payable to customer is also advance. So we are looking at fixed consideration and variable consideration. Under variable consideration, we will only be looking at bundle discounts. Only discounts, nothing else. We don't have to learn money back guarantees. We don't have to learn bonus. We don't have to learn penalties. Nothing, guys. Okay. So let's move to the next step and find out how we can do this. Another instance when there can be a variable consideration is based on the outcome. Now look, read this with me. Roshan provides a service to a customer for the next 12 months. The consideration is 12 million. Okay. Basically, the price is 12 million. Nafis is entitled for an extra. Okay. This has to be Roshan, right? Roshan is entitled for an extra 3 million rupees if the number of mistakes made fall below a certain threshold. Okay. So he will be getting this bonus only with one condition. What is that? Only if the number of mistakes falls below a certain limit. Okay. So in this case, how will the accounting treatment go? Just giving you an idea, guys. If you think there is a high chance, okay, if there is a high probability that Roshan will not make any mistakes, then you must take the transaction price as 15 million, which is 12 plus the bonus 3. If you think there is a high chance Roshan's mistakes will increase beyond that threshold, then what is the transaction price you have to take? 15 or 12?
12.
12 million. So this is how you treat bonus. And sometimes when they give you multiple probabilities, okay, when they give you multiple probabilities, how do you do this? Read this, guys. A construction entity enters into a contract and will receive a performance bonus up to 100,000. CU is, guys, current units. You can just replace this with rupees. Okay. Bonus can be up to 100,000 rupees. If it meets specified performance targets, it estimates the likelihood of achieving the targets as follows. Now look at this, guys. There is a 10% probability, okay, of you going up to a bonus of 100,000 rupees. There is a 30% probability of you getting a bonus up to 80,000 rupees. 35% probability of up to 60,000 rupees and 10% probability of going up to 40,000 rupees. What we have to do is we have to multiply these probabilities and add them together to calculate something called, guys, the expected value. So this will be the expected value of bonus. So what will be the transaction price we will determine? It will be the fixed price, which is not given here, plus the expected value of bonus. So this is another instance when they give you multiple probabilities. Okay. But what we are mostly determined to do is knowing how to allocate the bundle discount. That's the most interesting part of this lesson, guys. Okay. Now look at this. McDonald's. I know every one of you have been there, right? Nobody can stay silent now. I'm sorry if this examples makes you hungry, guys. I'm very sorry. But just tell me, does McDonald's sell burgers separately? Guys, do they sell burgers separately?
Yes, sir.
Yes. Do they sell Coke separately?
Yes, sir.
Okay. Now we are getting some sound. Eh? Do they sell French fries separately? Not very sure, but let's just assume yes. Okay. So guys, can we say that French fries is a separate performance obligation, Coke is a separate performance obligation, and this burger is a separate performance obligation? Can I say like that? Is it okay to say like that, guys? Guys, can I say like that? Is it okay? I'm talking to you all. Yes. Yes, yes. Yes, guys. Why? Because McDonald's can sell these items individually. So, although you buy this as a meal, you can call this a meal. You buy this meal by giving a bulk price, which is, let's say, the meal itself will cost only about 900 rupees. Let's just assume, okay? The meal will cost you about 900 rupees. However, in this meal, they are giving you French fries, Coke, as well as burger. Then our next question is, can McDonald's sell Coke, burger, and French fries separately? If the answer for this question is yes, then that means these are three different performance obligations. Yeah. So can McDonald's go to their income statement and under sales, can they open a category called burger meals and record this revenue there?
No, sir.
No. If they have separate line items or segments for burgers and Coke and French fries separately, they have to make sure to allocate this 900 between those three individually. Is that clear?
Yes, sir.
Everybody? Others? Guys,
Yes,
is
sir.
that clear to you all? Please reply. Then only I can move forward. Everyone, we have 22 participants.
Yes, sir.
Okay. Okay, then, right. Okay. Now, how do we allocate the transaction price? This is step number 4. Step number 4 is allocating the transaction price. How are we going to do that? Now, you have to find out the standalone prices first. Standalone prices. That means if McDonald's sells burgers, fries, Coke separately, what will be the prices? Now, you all have to give me the price. Huh? Please help me with the prices. McDonald's standalone selling prices. Burger, fries, and Coke. Tell me, guys, if you were to buy the burger separately, what will be the price? What will be the average price if you were to buy the burger separately? Just an estimate would do, guys. Are you? Oh my God, wait. Yeah, how much roughly? Okay, so we're getting some responses. Okay, 600, 700. Okay, let's just assume it's 600. Fries, if you were to buy separately, what would be the rough pricing? 300, 400. Okay, let's just say 300. What about Coke, guys? What about Coke? If McDonald's sells separately, what will be the pricing? Tejika, 200. Okay. 200 rupees. Okay. So if you were to buy these three separately, guys, what will be the total price you will have to spend? How much is the total? 600, 300, 200?
1,100, sir.
1,100. Okay, 1,100. Now we need to know how to allocate rupees 900. How to allocate rupees 900 for burgers separately, fries separately, and Coke separately. Any idea how we can do that? We need to allocate this 900 between these distinct performance obligations. Any idea how we can do that? Guys, so what we can do is we can look into the ratio, right? We can look into the standalone selling prices ratios. Now, if burger was sold separately, what is the price? 600. But if you were to buy all these three together, what will be the total cost? 1,050. So tell me, on a ratio, how many percent is that? How many percent is 600 over 1,100? How many percent? $57. Okay. 57%. So this is 57%. Okay. Now, if you were to buy fries for 300 rupees by spending all these three items separately for 1,000, okay, this is not 1,050, this is 1,100. Ne? What is the percentage, guys? Please calculate and tell.
4%.
54%, sir.
54%. $300 over 1,100. Tell me what is the percentage here?
27%.
And Coke, 200 over 1,100. Tell me what is the percentage here?
18%. 18%, sir.
18%. 18%. Now, guys, it's time for us to prorate this 900. How much is 54% of 900? How much? 486. Thank you. How much is 27% of 900? 243. Awesome. How much is 18% of 900? 162. 162. Awesome, guys. Awesome. %54. 27%. Okay. 18%. Awesome. So, guys, this is the fourth step. What is the fifth step then? Final step. What is the final step? What is the final step, guys? Fourth step is to allocate. Final step is to recognize revenue when the entity satisfies the performance obligation. Now, guys, how do we record the revenue here? Are we going to wait and watch till the customer takes a bite of burger, takes a bite of fries, has a sip of Coke? Are we going to wait and watch till the customer do that? Tell me, guys, are we going to wait till the customer takes a bite of the burger in order to record the revenue?
No,
No,
sir.
guys. What we will do is, if it's a goods, if it's related to goods, as soon as the control is passed, as soon as you give the burger to your customer's hand, it will be recorded as revenue. Okay. But if it's service, the case is different. Before I go to the final step, let's look into another question. Okay. Another situation. Guys, pay attention. This is very important. Latest standard, highly tested. Ayodhya sells a machine. Before that, please tell if everybody is clear with this example, allocating the transaction price. Everybody?
Yes.
Akram? Aisha,
Yes, sir.
Malika? Yes. Isham? Shalan? All good? Radushan?
Yes, sir.
Okay. Let's move into this example. Ayodhya sells a machine and 1 year's free technical support for 100,000 rupees. Okay. Make this, guys, 2 years. 2 years free technical support for 100,000 rupees. So whenever somebody says something is free, guys, remember in their income statement, it's not really free. They are actually recording it as separate revenue. Just remember that, guys. So whenever somebody says free, as accountants, you need to know in their income statement, they are actually recording that revenue. The sale of machine and technical support for 2 years have been identified as 2 separate performance obligations. That means Ayodhya, does she sell machine separately and technical support service separately? Does she do that? Yes, 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 that's right, guys. She does do that. Okay, she sells these separately. That's why they are telling these are separate performance obligations. Now, Ayodhya usually sells the machine for 95,000 rupees, and it has not yet started selling technical support as a standalone service. Okay, so guys, Ayodhya, is she selling technical support service as of now? Has she already started selling service now?
No, sir.
No. However, they are saying other support services offered by Ayodhya usually attracts a markup of 50%. She has estimated that technical support will cost 20,000 rupees. Okay. Now look at this, guys. Ayodhya is planning to sell. Ayodhya is planning to sell technical support service separately. So far, she has not sold. However, we know the cost of that technical support service. Cost of providing is 20,000 rupees. And normally, any other services Ayodhya provides, she keeps a markup of how much? She keeps a markup of 50%. So tell me, guys, if Ayodhya were to sell this separate service, if Ayodhya were to sell this service separately, what will be the standalone selling price? What will be the standalone selling price? %50 markup on 20,000 rupees. 30,000. Awesome. 30,000. So guys, remember, what are the two separate performance obligations here? One is the machine. That's right. One is the machine. The other one is the technical support. Technical support, Ayodhya is promising for how many years? For how many years? 2 years. Very good, guys. 2 years. That's right. 2 years. Now we need to first of all identify the standalone selling price before we can allocate our transaction price. Transaction price total is 100,000. Okay. Transaction selling price is 100,000. We have one performance obligation here, another performance obligation here that we have taken down. Standalone selling price of selling the machine is how much, guys? 95,000 rupees. Now, technical support, if she were to sell it separately, what would have been the standalone selling price? What would have been the standalone selling price? $30,000. That's right, guys. 30,000 would have been the standalone selling price if the service was sold separately. Okay. Are you guys clear up till this point? Everybody?
Yes, sir.
Yes, sir.
Yes, sir.
Yes.
All right. First step, there is a contract between Ayodhya and the customer. Second step, identify the performance obligations. Does Ayodhya sell machine and technical support separately? Yes. If the answer is yes, then those are two separate performance obligations. Then identify the transaction price. It's 100,000 rupees. Number 4 is allocate the transaction price to separate performance obligations. In order to do that, we need the standalone selling price, which is 95K and 30K. Now, guys, it's very easy. Tell me what is the total if somebody were to buy these separately from Ayodhya? $125,000. Can you tell me how many percent is 95,000 over 125,000? How do we allocate? How do you find the transaction price? Very simple, guys. 100,000 is the transaction price. We need to multiply the ratio of 95,000 divided by 125,000. So just tell me how many percent is that? Thanks, guys. 76%. 76%. Awesome. Okay, how many percent is this then? How many percent is this then?
24%, sir.
24%. Awesome. Awesome. Right. So you have to multiply 24% of 100,000 and 76% of 100,000, which is 76,000. Guys, are you all clear with the fourth step? Allocating the transaction price. Are you all clear with fourth step? Allocating the transaction price. Everybody.
Yes, sir.
Everybody is clear? Anybody has any doubts? We can discuss. Amna Niyamatullah, are you good? Are you good? You're very silent today. Any doubts? Are you clear? Hasna? Sauda, all good? Okay. Isham, what's up? Isham, what's up?
Good, sir. All clear.
Good. All clear? Okay, perfect. So this is the fourth step, guys. Fourth step. Fifth step is, guys, to record the revenue. Like I told, if it's goods, you have to record it immediately. If it's service, you have to record it over time. Now, if you take burgers and Coke and French fries, those are goods. So you don't have to wait until the customer gets satisfied by taking a bite. Okay. As soon as you pass the control of burger to your customer's hand, you have to record the revenue. So basically, there are two methods of recording the revenue. One is, guys, at a point of time. At a point of time. This is especially for goods. Okay. The second method is, guys, over time. Over time. This is especially for services. Services. So basically, the principle behind recording revenue is only when the promises are fulfilled. When I say promises, what am I talking about? When the performance obligations are met, basically you have to record the revenue. Simple as that, guys. Is that clear? So any goods you have to record as soon as you pass the control. But services are not like that, guys. Okay. Services example, I'll give you three example. Three example when you record revenue over time. One is construction. Construction. You record revenue over time when you construct. I'm sorry about that, guys. Cannot hear me? Cannot hear me now? I think I got disconnected. Awesome. Please confirm if you all can see my screen.
Yes, sir.
Yes,
Okay.
sir.
Now, Easylink is providing goods or services?
Services.
Services. So that means the benefits are being consumed simultaneously. Okay. While I teach, you are learning SLFRS 15. That is service. Okay. So for service companies, construction companies, or when you build an asset specifically for customer, tailor-made, websites, softwares, right? All these items over time, as you keep progressing towards completion, you have to record revenue. But goods, not like that. When you transfer the control of the goods, you have to record. Services over time, as you keep satisfying the performance obligations. Now, let's discuss how Ayodhya will record revenue for the previous example. Now look at this example and tell me which one of these is goods and which one of these is services. Which one of these will be at a point of time? Which one of these will be over time?
Technical support will be over time and machine will be at a point of time.
Exactly. Now let's say you buy the machine from Ayodhya. As soon as you get the machine, Ayodhya will record this 95,000 in her income statement. Is that clear?
Yes, sir.
Sorry, not 95,000. It's how much? 76,000.
6,000.
Okay. Now I'll just illustrate it here, guys. Let me know if anything is not clear. We take year 1, year 2. Two performance obligations. One is the machine. The other one is 2-year technical support. Okay. What was the transaction price we have allocated? 76,000 and
24,000.
24,000. 76,000 and 24,000. Now, can Ayodhya record in the income statement of year 1 this entire 76,000? Can she record?
Yes, sir.
Yes. Can she record this entire 24,000 in the first year? Technical support.
No, sir.
No, no. What does she have to do? This is provided over time. So only 1 year should be prorated and recorded in year 1. And the remainder will be recorded in year 2. Is that clear to all of you? Is that clear to all of you?
Yes.
Yes, sir.
Awesome, awesome. So that means first year, how much will be recorded, guys? First year? 24,000 divided by 2. How much?
12,000.
12,000.
12,000. In year 2, how much will be recorded? Another 12,000. So remember, guys, when the service is provided over time, you have to record it over time. Okay. However, machine control is passed at a point of time. So you have to record at a point of time. So altogether, year 1 revenue will be how much? 88,000. Year 2 revenue will be how much? 12,000. Okay. Now let me ask you all a quick question. Let's say Ayodhya is paying entire 100,000 today. What will be the double entry, guys? Now you all tell me. What should be the double entry if Ayodhya is paying the entire 100,000 today itself? Anybody, any smart one? Any smart person? Yes, let's see. How should we go about that, guys? Feel free to discuss with me. You can put in the chat if you all are too shy to unmute. Okay, now if you are receiving 100,000 cash at once, how much should be debited to cash account? 100,000. Is that clear? Is that clear to all of you? Yes, that's right, Anisha. Debit cash 100,000. Okay. Then sales account, how much should be recorded? 100,000 or 88,000 for year one?
88,000.
88,000.
Exactly. Year one double entry. Only 88,000 will be recorded. Right now, when it comes to classifying it under segments, in the income statement, you can record it under two separate revenue streams. But for now, for double entry purpose, I'm just showing it as a whole. Okay. Then remainder 12,000 will be credited where?
Prepaid.
Exactly. It is, guys, advance received account. It is prepaid. Guys, is this visible? Blue font in black color. Sorry, red color. Then remainder will be credited to advance received account 12,000. 12,000. So this is how you record. Then year two, what will be the double entry? Year two. Are you receiving money again?
No.
So you have to credit sales 12,000. From where are you going to debit? The corresponding double entry comes from?
Advance received account.
Exactly, guys. Awesome. Now you all have got the hang of it. Are you all clear with the double entry? Are you all clear with the recording, with the recognition of revenue? Are you guys clear how the revenue is captured here in this case?
Yes, sir.
Everybody.
Yes, sir.
Awesome, awesome, awesome. Right. So let's just do one more example. I know you guys are very tired. Let's just do one more example and then we are done. Okay. On 1st December 2001, Adila receives an order from a customer for a computer as well as 24 months of technical support. So again, same thing. Computer as well as 24 months of technical support. Adila delivers the computer and transfers the legal title on the same day. So computer, is it transferred at a point of time or over time?
Point of time.
At a point of time. The customer paid 10,000 rupees upfront. If sold individually, computer would have a standalone selling price of 7,000 rupees and technical service will have a standalone selling price of 5,000 rupees. Okay. Now let's go through the 5 steps. All of us, guys, tell me what is the first step? First step is contract. Is there a contract between Adil and customer? Yes. Second step is identifying the performance obligations. Tell me, what are the two separate performance obligations here? What are
Sale
the
of
two?
Computer,
and technical support.
Yes, computer and the tech support. Okay, third one. Third one. What is the transaction price? How much is customer paying?
10,000.
10,000.
Yes, 10,000. Fourth step is for us to allocate. Fifth step is to recognize. Right. So let me do step 4 here. Step 4, allocation. Performance obligations, computer, and the technical support. What is the standalone selling price, guys? Computer, if sold individually, will have a price of how much?
7,000.
7,000. Technical service will have a price of 5,000. So total 12,000 here. Okay. However, what is the total transaction price?
10,000.
10,000. So can you please allocate and tell me how much should be allocated to computer? How much should be allocated to technical support? Everyone will have to give me the answers, whether it's right or wrong. Guys, are you all done? Okay, so I got quite a lot of answers. 58% and 42%. Okay, so let me do it again with you all. How are we going to do this? 7,000 divided by 12,000 will give us 58%. And 5,000 divided by 12,000 will give us 42%. So that will be 5,800, 58% into 10,000, 42% into 10,000 will give us 4,200. So the transaction price is allocated as well. Okay. Now, how will Adila record the revenue? Fifth step, recognition of revenue. How? First year, she will record computer sale 5,800. Technical support is for 2 years, guys. So only the first year will be recorded. How much is that? 4,200 divided by 2, 2,100. So what is the total revenue recorded in the first year of Adila's business? How much? 7,900. Second year, she will be recording the remaining 2,100 because that is the year when she is providing technical support. You know, the second 12 months. First 12 months is for the first year. Second 12 months is for the second year. Are you guys clear? All of you?
Yes.
Okay. Now, what we have learned is definitely sufficient enough for the exam, right? We have covered a little bit of beyond the scope as well. Upcoming weeks, guys, let's do past paper questions. Past paper questions with please as well as the SLFRS 15. I hope you guys are happy. Tell me if everybody is okay with this lesson. Any doubts, guys? Any doubts?
No,
Isla,
sir.
all okay. What about others? Akram, Sati,
Yes, I'm
perfect. Sauda, Tejiga, Zaha. Zaha, are you okay? Zainab Aisha. Okay, then let's find out. If you guys having any doubts, you all can DM. Right. See you all next Sunday, guys. Take care, all of you. Bye-bye. Stop live streaming.